Digital currencies have been a buzzword in the financial world for years now. But recently, central banks around the globe have begun taking steps to create their own digital currencies, known as CBDCs, Central Bank Digital Currencies. Today, we'll explore what CBDCs are, why they're being created, their potential uses, and how they could revolutionize the global financial system. So what exactly are central bank digital currencies? In simple terms, a CBDC is a digital form of a country's official currency, issued and regulated by its central bank. Unlike cryptocurrencies like Bitcoin or Ethereum, which are decentralized and operate independently of any government, CBDCs are fully backed and controlled by central authorities. Think of it as the digital equivalent of cash, but issued directly by the central bank. CBDCs exist in two forms. 1. Retail CBDCs, designed for everyday transactions between individuals and businesses. 2. Wholesale CBDCs, used between financial institutions like banks and governments to streamline payments and settlements. Countries like China, Sweden, and the Bahamas have already launched or piloted their digital currencies, with others, including the United States and European Union, researching and developing their own versions. But why are central banks around the world racing to develop digital currencies? Several key motivations are driving this trend. Financial inclusion. CBDCs can provide access to financial services for people who don't have traditional bank accounts. In many developing countries, millions of people remain unbanked, but almost everyone has access to a smartphone. A CBDC could offer a solution, giving everyone access to the digital economy. Cost and efficiency. Traditional cash and payment systems are expensive to maintain. Printing, distributing, and securing physical money costs governments billions annually. CBDCs could reduce these costs, making payments more efficient by eliminating intermediaries. Competition with cryptocurrencies. As cryptocurrencies like Bitcoin gain popularity, governments are keen to maintain control over monetary policy. CBDCs allow central banks to provide the benefits of digital currencies while retaining regulatory control. Cross-border payments. Sending money internationally can be slow and expensive. CBDCs could facilitate faster, cheaper, and more transparent cross-border transactions, reducing reliance on costly intermediaries like SWIFT. So how do CBDCs work in practice? Unlike decentralized cryptocurrencies, CBDCs rely on a centralized ledger, controlled and maintained by the issuing central bank. This ledger records every transaction, ensuring that the currency is used in a transparent and traceable manner. In the case of retail CBDCs, individuals and businesses could hold digital wallets directly with the central bank or through intermediaries like commercial banks. These wallets would allow for instant digital payments, similar to how apps like Venmo or PayPal work today. However, instead of relying on private companies, these transactions would be backed by the central bank's digital currency, ensuring greater stability and trust. CBDCs have a wide range of potential uses, from everyday transactions to reshaping global finance. Let's look at a few examples. Digital payments. In an increasingly cashless world, CBDCs could provide a safe and stable alternative to credit cards and other payment apps. Unlike credit cards, CBDCs wouldn't require hefty fees for merchants, and transactions would settle instantly. Government payments and benefits. Governments could use CBDCs to make direct payments to citizens. This would be especially useful during emergencies, like a pandemic, where quick, direct transfers are necessary. Instead of distributing stimulus checks or welfare payments through banks, governments could instantly deposit funds into a citizen's CBDC wallet. Smart contracts. Some CBDCs may integrate with blockchain technology, enabling smart contracts, self-executing contracts where terms are directly written into code. This could revolutionize industries like law, real estate, and finance by reducing the need for intermediaries and automating transactions. Cross-border trade and remittances. CBDCs could simplify and speed up cross-border trade and remittances. Traditional systems can take days to clear payments across borders, but CBDCs could allow these transfers to occur in real time, reducing costs and increasing efficiency. Despite their potential, CBDCs come with significant challenges and concerns. One of the biggest issues is privacy. With every transaction recorded on a centralized ledger, CBDCs could give governments unprecedented surveillance power over citizens' financial activities. This raises serious concerns about personal privacy and potential misuse of this data. Another concern is the impact on traditional banking systems. If citizens could hold money directly in CBDC wallets, it might lead to a reduction in deposits at commercial banks, potentially destabilizing these institutions. Banks might have to rethink their business models, relying less on deposit-based lending and more on other revenue streams. CBDCs have the potential to reshape the global economy. On one hand, they could strengthen monetary policy, giving central banks more control over inflation and interest rates. On the other hand, they could introduce new risks, particularly in how countries interact economically. For instance, widespread adoption of CBDCs could weaken the dominance of the US dollar in international trade, especially if countries like China continue to push their digital yuan. Additionally, with global CBDC adoption, financial flows could become more transparent, helping to combat tax evasion and money laundering. However, this transparency must be balanced with respect for privacy rights. The rise of CBDCs marks the beginning of a new era in finance. While their full potential is still being explored, it's clear that CBDCs could offer a faster, safer, and more efficient way to handle money in the digital age. But as with any new technology, the road ahead is filled with challenges. How governments balance the benefits of CBDCs with the concerns of privacy, security, and the impact on traditional banking will shape the future of global finance. Thank you for watching. If you're interested in learning more about the future of money and how digital currencies are reshaping our world, don't forget to subscribe and hit the notification bell for more insightful content.